Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 1st of September, starting off with Altus strategies, which I've been meaning to look at for quite a while. I suppose we've had that vertical move over the recent past, bear trap, a reversal, gap reversal there through the 50-day moving average and then also through that line of resistance from February. Gap higher today as well, so that's pretty good news. And as gaps tend to come in threes, maybe we can have another one ahead of a potential move up to that July 2020 resistance line projection as high as £1. Maybe that could be seen by the end of the month. Upside valid at least while we're above the 200-day moving average there at 69 pence. Moving along to Braveheart, where there was a placing at 18 pence, which the great and the good of that company managed to get in at. I don't think we actually saw the shares go below 18 pence after the placing, so there's a message there somewhere. And normally when a stock doesn't go below the placing price, that is a very strong signal. We also had a key reversal to the upside of the support, which was the signal there really back in, I suppose, what was that, the 16th or so of August, that kind of session there. Moved along sideways, but have now broken through the 50-day line. Above that at 36 pence, looking for the 200-day moving average up to 49 pence. Post-May, we've seen the shares find resistance at or just above the 200-day line, so we'd expect the same thing to happen again. Stock which hasn't had quite such a happy story is Challenger Energy. Here you can see that it's been pretty torrid of late with the gap down, vicious gap down in February, and then another one in April. And the current situation is that we're possibly hitting that line of support there from June, bouncing off the 1.1 pence level. What will be interesting to see now is whether we can close above the support of the 25th of August at 1.3 pence. If we can do that, we're on there now, then the initial target here up to 1.5 pence. Best case scenario target for fans of the shares up towards 2.5 pence. Above the 1.5 pence level, but we need to crawl back above 1.3 in the meantime. It is interesting, I suppose, that we've got bullish divergence of a sort, in the sense that the lows of August much lower than the lows of July, but the RSI no lower, so that is a possible clue to a reversal for Challenger Energy. On to Cobra, which is perhaps a more straightforward situation. Here we've got a falling wedge breakout, also an end-of-day close likely back above the old 1.75 pence low from June. If we can manage a close above 1.75, then we're looking towards the 200-day moving average at 2.25 pence. 2 to 3 months down the line, maybe up to 3 pence at that March resistance line projection. But we just need to stay above 1.75 to get that particular scenario going. Bullish divergence as well last month versus the lower lows for August and the lower RSI for June. On to a stock which has still to push higher, perhaps in the way that we all wanted, or fans of the shares wanted over the recent past. Here we see that the shares did actually in the end hit that 200-day moving average at 0.32. That was factored into the bull argument, and that's also the floor of the rising trend channel from June. While we're above 0.32, then looking still for the 0.8 pence level, maybe on a 2 to 3 month view, with the buy trigger and end of day close back above the 50-day moving average at 0.38 for those who are not so sure of Canadian overseas technical credentials. Onto a stock which I covered yesterday in a Bulletin Board Heroes special, and quite pleased that I did it. Normally I sort of bunch all these shares together in one Bulletin Board Hero video, as is the case with this one, but yesterday we had a key reversal to the upside. I think they were around 16, 17 pence when I did the video. I was looking for 23 pence as the initial target. 23 pence was derived from that December resistance line, and rather than doing it by the end of the month, we did it by the end of the next day, which is always pleasant. We've got a little bit more on the upside if we can squeeze through to the 200-day moving average at 26 pence. End of day close above 23, I think, would be great for the EUA cause and allow the shares, I suppose, by the end of this month to head into the low 30s, which has been basically it's basically been 2021 resistance for the shares. So above 23, looking for 35. And the minimum, I suppose, is 26, which is the 200-day line. If you're a fan of the shares and you'd like to dream of greater glories, then it is the top of that triangle there from the autumn of last year at 57 pence, which could be an end-of-year target, but I'd like to see the shares firstly remain above 23 pence. Moving along to one of the stock market's best performers of the year to date, even with the retracement that we've seen recently. Another 200-day moving average rebound, like the one we're seeing at KPEL at the moment. So the 200-day line here at 1.25. Above that, looking for a retest of the late July resistance at 2.25 pence, and that could be seen by the end of this month. On to IMEDIA, which was looking intriguing, let's say, just a few days ago, but here we've had the shares manage to close above the old floor there, the old low there at 13.75. So the close basically on the 27th at that level, or just near that level, at that level, in fact. Initial target here up to the 20 pence level, which is a line of resistance from July. After that, maybe up towards the 50-day line currently at 21. So 2021 looks as though that's possible for IMEDIA, especially while we're above the old resistance there around 15.5 pence from early August. Moving along to KAZIRA, which is intriguing or is interesting because of the latest gap on the daily chart. Here we've got a situation where the shares have gapped higher today above the 50-day moving average. Perhaps all we want to see now is an end-of-day close above the 200-day line around 1.45, which would also break that April resistance line. If we can do that, then on a 2-month view, we're looking for a retest of April resistance towards the 2.4 pence level, maybe by the end of next month. Stop loss back below 1.2 pence on that. Anyone who likes a falling knife might need to look no further at the moment than Salt Lake Potash. Here we can see that the shares have continued to dive lower. What is interesting, though, is that the lower lows that we've had over the course of the latter part of August and going into the new month have not been matched by lower RSI trades. Maybe that's because the RSI is already so low. But there is the possibility that the shares may get some benefit from bullish divergence and maybe rally back to the 5.5 pence, 6 pence area, which they were in the middle of last month. Just a couple of stocks to go now. Tissue Regenix, more straightforward fare here. Here we've got this, I suppose it's like a wedge or a range between 0.65 and 0.77, let's say. What we want to see, though, is an end-of-day close 3.77. That could bring up a new target through 1 pence, which is the top of a rising trend channel from January. So any dips towards that support line there from January, 0.66, 0.67, regarded as a dip to buy into on a technical basis. Finishing off with WEBI, which once again looks as though it's on the front foot technically. The reason for saying that is the recent break of that resistance line there from last month on the 50-day moving average at 4 pence. Above 4 pence, we're looking for a minimum at the April resistance line at 5.5, and then obviously retesting the best levels of the year to date through 6.5. That's it from me today. More updates tomorrow.